Welcome to the first edition of the Revere Roundup Weekend Walkthrough hosted by myself and Ted. Basically, our goal with the weekend walkthrough is we want to provide you guys a comprehensive summary of the previous week's action and then provide you guys some insights into the week ahead.
All right, let's jump right into it then, Connor. So the first order of business, we're going to go over the market's trend based off the market leaders, our short-term, medium-term, and long-term trends, which we use the 21 EMA, 50 SMA, and 200 simple moving average to gauge. Market leaders we currently have at neutral, and we upgraded that from bearish downtrend, and we'll explain why in the sectors and stocks section of our weekend walkthrough. Short term, we still have it at down as we're still pretty much right at the 21 EMA, and we want to see more power through that moving average. Medium term, down as well. We're below the 50-day simple moving average. And then finally, long term, we are still above that 200-day simple moving average. So we have that as up. Let's jump right into the S&P 500. Before I get into it, the white line is a 200-day on my screen. This blue line is 150-day, red line 50-day, green line 21 EMA, and then the purple line is the 8 EMA. So last week was following a 6 days down in a row, a huge distribution week, and we undercut this orange line, which is the year-to-date anchored VWAP, and reclaimed it. So that is definitely a healthy start to getting this market back into an uptrend. But what is a little troublesome here now is that we gapped up into the 21 EMA, 50-day simple moving average, and this all-time high anchored VWAP, which we've rejected ever since we put in that all-time high. Another thing to note is that we do have an inside week, but it is on higher volume. And so this next week will be extremely pivotal, especially with FOMC and a bunch of different earnings. Continue on. This is the Qs, our NASDAQ proxy that I'll use. I have this rally low anchored VWAP that we held almost perfectly, and then we reclaimed the year-to-date anchored VWAP as well. But just like the S&P 500, we're coming into the 21 EMA and those two other all-time high anchor VWAP and the declining 50-day. So we really need to see us get back over this with power to really give us some conviction that the rally is back on. Once again, last week was a huge distribution week. Literally we sliced through the 10-week moving average and the 20-week moving average, and this week's an inside week. So it'll be really key to take out last week's high this week. Mid caps, pretty much same story. Just in between the year-to-date anchor VWAP and that all-time high with the 50-day and 21 above. Small caps, the picture looks a bit worse. We're below that year-to-date anchor VWAP and the all-time high anchor VWAP, as well as those key moving averages. It was good to see the VIX completely collapse back to the 15 range, which just shows that volatility is coming down a bit. And for us trend followers, we see volatility as the plague. So this is definitely a good first indicator that we might be able to get back in the smoother trend in the future. Just a quick ratio chart. This is the high yield junk bonds with this with the IEI, which was just regular bonds, and it seems like we're breaking out into new highs. So that's a first start as well. Dollar, this could prevent a headwind. This weekly range we broke out of, and now we're forming a daily bull flag with a bullish engulfing off the 21 EMA last Friday. Gold just continuing its 10-year cup with handle breakout, just flawless action right now, surfing these shorter term key moving averages. Silver as well broke out of this weekly range, great action. Copper has been the strongest, just a frozen rope up at 21 out of this weekly range. Crude, we're back testing the weekly downtrend line here after breaking out. This is definitely something we watch to gauge just the stickiness of inflation and how worrisome the wars in the Middle East might actually be. And for now, it doesn't seem like the market cares too much. Just a quick glance at the yields. The 1 year is bull flagging, the 2 year as well. and the 10-year actually broke out of its bull flag. So we have to really see where these go, as well as rates are often a huge headwind and the kryptonite for equities. Now, just quickly going over Bitcoin. We had a huge breakout of 44,000, and now we're just consolidating this in about a 7-week base. We undercut and reclaimed the 60K level so far, and we're kind of just digesting. So not really actionable yet, but we had the halving, and we just really want to see which direction this resolves in the future. Now, going on to some breadth, we'll start off with the Pradeep market monitor. It's something we watch just to gauge breakout and strength action. We saw some strength come back in last Friday, but the number of stocks up 25% plus in a quarter and down is still in that red zone. So even though we do have some leadership groups starting to act well, we are aware of the market environment, and it's not still fully favorable for breakouts. Net highs came back in the New York Stock Exchange, but we start seeing net lows in the NASDAQ. The lows are contracting and the highs are expanding, so that's a good first sign. NYSE and NASI, we're trying to hook back up, but not that much progress yet. We definitely want to see that get back above the 10-day moving average. There is a huge change in sentiment AAII readings. We're above historical averages on the bullish end and then below on the bearish end, with a lot in neutral above historical averages as well. And it just shows that market participants are somewhat just unsure, indecisive, which definitely makes sense considering the fact that when we went over the averages, we're just kind of pinned in between some key levels. So what will really give us conviction on either end is to see if we break out or we reject these key levels and make another leg down. And then finally, the NAM, we saw this cool off as well, which is definitely a good sign. To see neutral readings, which potentially can provide us fuel higher if that is what the market chooses. Connor, do you want to bring us into sectors and what you're seeing there?
Yep. Yeah, I'm going to share my screen here. Can you see my screen?
Yep.
Perfect. Yeah, so looking at sector performance, last week tech was the big winner, and this was largely due to Google with a super positive earnings reaction, along with strength from NVIDIA on Friday, up nearly 6% with other semiconductors. And then Microsoft as well. That was up early post-market on the earnings report, and then it closed low of day. I will say Microsoft, that's an important name to keep an eye on, as it's the biggest name in the market, and likely whatever that does, the market will do as well. And then if we look at industry group strength, this is key in catching trends and emerging themes. But so airports and air services are the 1 week performance leaders. United Airlines had a positive earnings reaction. You have Delta trying to break out from a base, and then SkyWest. This is another airlines trading at highs and showing relative strength. So that's what we're seeing there. And then semiconductors, they were very strong as well. ALAB, this is a new semiconductor IPO that was up 18% on Friday. And then we saw some snapback rallies from, NVIDIA, Avgo, Micron, and TSM. And then the semiconductor equipment names such as LRCX, KLAC, they were all strong as well. And then so if we zoom out to the 1 month performance, it's what we've been seeing. Silver, precious metals and minings, gold, copper, uranium, all commodities and metals have been the best performing sectors, and that's evident in the individual stocks as well. These have had the nicest trends and the best moves as of lately versus technology, which has been very choppy and going back and forth, not really having a trend. And then so some important ETFs that I like to look at for proxies. The first one is MTUM. This is the momentum factor ETF, and I like to track this one for the health of growth and momentum style names, along if breakouts are working or not. And as you can see, this trend up here, this is when the market, it was the easiest trading environment. Breakouts were working, growth stocks were working. But this formed a double top right here, and it's rolled over the 50-day. And last week, it built a minor higher low. And now this is rallying back up into the 21 and the 50-day. And not out of the woods yet, as this would be a logical area to reject. But if we zoom out to the weekly chart, I mean, this was a huge stage one base breakout, big run up, and now we're pulling back to the 21-week moving average. So from a weekly time frame, this is still in a weekly up cycle, but the daily, it's going to need a couple weeks to look better, to form another base, to potentially move higher. GDX, I wanted to highlight this. Gold miners have been some of the strongest stocks in the market. This broke out of a nice cup and handle last week, and you can see this. I talk about this a lot, but this big base right here. So this continues to be one of the best places in the market. And zooming out, this is still a huge weekly base. Partly, the gold miners had some strength also due to the fact that NEM, this is a gold miner, this had a power earnings gap. It was very strong. And then other ones, HMY, this is setting up a little high tight flag. EGO is another gold miner. This attempted to break out of this flag, but still looks overall very constructive. And then AEM, this is another leader in the gold miner spaces. So continue to track the relative strength in these names in their overall sector. SMH, semiconductors, similar with that momentum ETF, I've noticed the best trading environments is when semiconductors are in gear and trending to the upside. And if you look back and look at, your trades and the indexes, this period right here was when the most momentum was in the market. We had that nasty bearish engulfing candle here, built a higher low and broke down lower. And with that broad-based strength from NVIDIA on Friday, this is now rallying back into the 50-day, and there's kind of some resistance right here. So it's really at a key level. And I mean, a wedge pop through here would be bullish, but it's a very logical level to reject as there's some resistance here, and it's the 50-day moving average. Ted kind of covered this quickly, but copper, again, one of the best places to be in the market right now. This isn't a lockout rally. And two of the leaders in the space, FCX, this is setting up a continuation flag after that breakout. And then SCCO, this is another one setting up a nice continuation flag. And one comparison that I found that I thought was interesting, CCJ, when you look at this weekly chart, I mean, it had so many characteristics. This was the first contraction, this was the second contraction, and then this final contraction. I mean, this was a textbook VCP, and look at the move it led to. And if you look at FCX weekly chart, I mean, it looks pretty similar. Building higher lows, and each contraction has gotten smaller, and it's broken out. You could call this extended, but at the same time, this is clearing a multi-month range. And as we've seen, for NVIDIA is probably the perfect example. I mean, when something breaks out of a range like that, it can lead to a big move. So yeah, that's for the sectors and some ETFs. Now jumping to earnings. Another busy week of earnings ahead. Some big names reporting this week. Earlier in the Tuesday, we have Amazon, AMD, Supermicro, IoT, Eli Lilly. So some big market stocks along with some growth names. And then later in the week, Apple, Coinbase, Square, DraftKings. So another hectic week and some more volatility. And so far this earnings season, the reactions have been mixed so far. VRT was one that sold off initially on the earnings day, and then it ripped right back up 8% the following day. Spotify as well, it gapped up, closed at low of the day, and followed through to the downside before finding support at the 50-day and falling through to the upside. And then we've had some solid gappers, PIs one, United Airlines another, and then Google from Friday was a strong gap. But I will say it's important to track these names and to find out what's the earnings trend. Is it because so far it's been very mixed with some names falling through to the upside and other pops have been sold aggressively. And one thing to note is some names have had major price advances leading into these prints, and a blowout quarter might not be enough. Sometimes where the stock is in its cycle is more important than the numbers itself, and Meta is a recent example of that. So that's about it for the earnings this week. Should bring some more volatility. I think I'll pass it to Ted, talk about some economic events for the week ahead.
Yep. So I just want to quickly highlight last week's notable data points. Thursday
Ted,
we had a week.
do you want to share your screen?
I think it's shared. Is it not shared?
Um,
It
oh,
should
there
be
we go.
shared.
Yep, it's good.
Last Thursday we had GDP come in weaker than expected, and then Friday we had PCE come in a little bit hotter than expected. So that kind of creates some worries about stagflation. Coming into this week, it'll be really key to see what Powell and the Fed has to say Wednesday. And that definitely is the is the main event that we're keying in on this week. We have other ones such as initial jobless claims Thursday, and then Friday we have U.S. Like data about the U.S. labor market, such as unemployment rate and hourly wages. Do we want to talk about the restaurant group and the AI data center group next?
Yeah, you
Uh,
can, if you want to talk about
okay.
data centers, and then I can
Yeah.
recap with some focus lists for the week
Yeah.
ahead.
Can you see my screen?
Yep.
Yeah. So right now I have 18 names that at Revere we've classified as AI and data centers. I'm not going to talk about the fundamentals or story of any of these stocks. Just going to provide you a list and quickly walk through the charts. The first one is CEG, building this like 5 week base here. Earnings in about 2 weeks. Amazon, what Connor talked about was a big one. We saw island reversal off the 100-day moving average and reclaiming this range. Google, as everyone knows, had its earnings and revenues beat, some great action into all-time highs here. Meta, disappointing earnings reaction, but still holding the 100-day. VRT, liquid cooling in the data centers, had a volatile earnings, couple earnings day and post earnings action, but we're back into all-time highs.
And real quick, Ted,
Yeah,
if you go back to that chart, and that's really what I was mentioning is we're yet to see that earnings theme. Like the previous quarters, it was really a gap out of a base and people were buying the
right.
gap up. Now, it's tough to gauge. It gaps up and then closes low of the day and then reverses 8% the following day. So I think we just need more evidence, some more names to report to give us our earnings theme.
Yep. And the next five names are on semiconductors, Avgo. Then we have the number one stock in the market, NVIDIA, um, staging an undercut and reversal, reclaiming the 821 and 50 days. So that's a power of three. And this is the name everyone's keying in on. TSM, reclaiming the moving averages as well. AMD, this is almost a laggard. It is a laggard at this point, but we still have it in our list just to monitor it. It's finding support at the 150-day. ARM also broke down, reclaimed the 100-day moving average, just a new IPO that we're still monitoring. Dell, this might be the most actionable stock on this entire list, post earnings reaction, and just consolidating that move. SMCI earnings coming up this week, looking to reclaim this 850 level, just pretty much did it, but we still have the 21 EMA and declining 50-day above. MU held the gap, stays low, reclaiming the moving averages as well. ASML found support at the 100-day and starting to get back above some key moving averages. Datadog in a base, trying to poke its head out here, but we might need to tighten up a little more. Microsoft, the biggest stock in the stock market, also staging an island reversal, but we're getting rejected by the 50 and 21 so far. ANET, one of the earlier leaders that actually started moving before the November follow through day. We saw this pullback here back to 150-day, but finding support so far. And then finally, this new IPO, A Lab, that's made a huge move last Friday. So Connor, are you going over restaurant stocks now?
Yep.
Okay.
Let me share my screen. Yeah, so yeah, first I'll talk about the restaurant theme. I talked about it on the podcast, but and this tailors into a focus name, but Kava, this is a bit extended for an entry now, but I mean this had a first day follow through the 50-day and then just beautiful move on Friday, breaking up 11% on 121% above average volume. And then just looking at the group, Wingstop trying to break out of this base. Sweet Greens, huge wedge pop back above the EMAs. And this has been a monster since that first earnings gap. CMG, I mean, this is just, if you look at the monthly, this is just one of the most model book stocks you'll ever see. Had another good earnings report falling through to the upside. And then Texas Roadhouse, again, another strong base. And then KRUS, this is a little thinner. Wouldn't buy it at Revere, but just to show there's a wide variety of names in this group that are setting up, and this has got a nice downtrend line break. And then, yeah, so some focus names for the week ahead. Hood's going to be the first one. This staged a massive run after this first gap, and now it's orderly pulled back to the 50-day. Poked its head above this downtrend line on Friday, and it looks really good for follow through. And when you zoom out to the weekly, I mean, this is coming off over a year of neglect price action. And as you can see, once it got above there, I mean, it's really started to ramp. Coinbase reports earnings this week, so that could affect is this does trade a bit with the cryptos. And then one thing I want to note is the group, like these brokerage service names. I mean, Interactive Brokers, one of the best acting stocks in the market. And then Charles Schwab, I mean, this is acting really good. I mean, there was all that fear with the regional banks, but once that was already priced in, I mean, this has had a nice run. And then Toast, this name's very intriguing. Looking at the weekly, it's gone sideways for quite some time, and it's trying to break out of this stage one weekly base. Had a strong day on Friday, wedge popped, and it's forming, a really actionable, nice base. And one thing that catches my attention with this name is that they provide the technology for these restaurants with the payment processors. And given the strength that we've seen in the restaurant stocks, this I think could be a really good secondary stock to play for the strength in that group. And if we look at some of the other payment processors, I mean, Square, weekly wise, it's just still building. Daily is a bit of a mess. Affirm, it is bouncing off the 200-day. The weekly looks better, but still kind of a mess. So yeah, Toast looks like the leader in this area, and one to watch moving forward. And then last name I'll mention is Airbnb. They do report earnings on May 8th, but it's recently broken out of this, like 28-week consolidation. The numbers are pretty good. They have a 92 comp rating, 77 EPS rating, up down volume of 1.1. We'll look at and this weekly chart looks pretty good. I mean, it's still not above those IPO swing highs, but earnings could fuel a gap. And what we've noted in our studies is these earnings gaps from the big bases lead to the best moves. And I'll just bring up a quick example. And GoDaddy is a perfect example of this. This was many years of neglect, and once it got through it, it went on a huge run. But some things about Airbnb is the pandemic's behind us. Everything really points to a recovery in travel, and the global vacation market has a huge TAM, and it's only growing. So I think this could be a leader. And the story really easy to get behind, use it myself. And I know a lot of people that actually prefer it over hotels these days. So that's one to watch. And yeah, Ted, do you have any other names you want me to pull up that you like?
I think we covered a lot of it. I think we're good. Do you want me to just give final thoughts then?
Yep, close it
All right.
out.
Sounds good. So yeah, that's a wrap for this week. We hope you really enjoyed this first edition of the Revere Roundup weekly walkthrough. Please definitely leave comments to how we can improve as I mean, we want to iterate as quickly as possible to provide you guys with as much value in our weekend videos. And then finally, feel free to reach out to both me and Connor in our emails, ted@revereasset.com and connor@revereasset.com, as well as, I mean, hit us up on Twitter if you would like as well. They're right here on the screen. If you have any questions or just interested in Revere Asset Management. We hope to see you guys next week. We'll be doing this every weekend from here on out.